3i Infrastructure is a London-listed investment trust investing in a balanced portfolio of infrastructure companies. That's mainly in the UK and Europe. Our aim is to deliver a return to investors of at least 8 to 10% per year over the medium term. That return comes through a mix of income and capital growth, with outperformance generally coming on the capital side. We also have a progressive dividend policy and have grown the dividend per share every year since IPO. The current year dividend target is up 6.7% on last year. 3i Infrastructure's purpose is set around three key areas: investing responsibly, delivering long-term sustainable returns, and having a positive impact. So those are our key areas of focus. We think we are unique in the listed infrastructure market. We invest only in infrastructure companies, so those are real businesses with employees providing essential infrastructure. Our companies work across a range of subsectors. That includes developing and operating renewable energy projects or fibre optic networks, for example. We even have a company that sterilises medical products like hip joints and pharmaceuticals. Whereas other listed infrastructure investment trusts generally invest in limited life concessions, so roads, hospitals and schools, for example, or already constructed renewable energy assets, or also in specific subsectors of infrastructure like digital connectivity. So we're different, investing in growing businesses with employees rather than concessions, and our investments are diversified across a range of subsectors. So we find that our companies and their management teams can adapt their businesses to respond to changing market conditions, and that we can find ways to outperform what could be done by an owner of a concession. We take a very active approach to managing our investments. We're on the boards of all of our portfolio companies, and we're very engaged with our management teams in looking for ways to outperform and also to find ways to have a positive impact. And that's always been key to how we invest. In fact, we provide a gateway for retail investors to access a portfolio of very actively managed private companies. We bring ambition and expertise to the board table, and we think that our proactive and responsible approach adds value to our portfolio companies. So we think about sustainability quite broadly, from building resilience in our portfolio companies through to how we look at environmental, social and governance considerations. There's a lot of information about that in our annual report and on the 3i Infrastructure website. We want to invest in businesses that have a following tailwind, so with demand for their services across economic cycles and over the very long term. We've identified a number of megatrends like the energy transition, digitalisation, urbanisation and demographic change, for example, and can follow investment themes related to those megatrends. Our businesses developing and operating renewable energy projects and fibre optic connectivity are good examples, and indeed the energy transition and digitalisation are the two largest megatrends behind our portfolio. With demographic change, we expect to see ageing populations in Europe and a corresponding increase in demand for healthcare relating to that change. So this trend supports our business Ionisos that provides essential sterilisation services to medical product and pharmaceutical manufacturers. Having a supportive tailwind from one or more megatrends gives our companies opportunities to grow ahead of our original investment cases, as well as providing downside protection in difficult market conditions. The company's performed extremely well. We've considerably outperformed other listed infrastructure investment companies since IPO, as well as the FTSE 250. I'll give you some figures. So 3i's total shareholder return has been over 12% per annum since IPO, and that's to the end of 2022. By comparison, the FTSE 250 has returned just over 6% per annum in that same time period. And the other listed infrastructure investment companies, whether investing in concessions or renewable energy assets, have returns below 10% per annum since their IPOs. And as I said earlier, we've grown the dividend per share every year since IPO. Good portfolio performance continued through the pandemic, which we think was an extreme test of the resilience of our portfolio companies and demonstrated the essential nature of what they do. Investing in infrastructure is a very competitive market, and that hasn't changed with the turn in the interest rate cycle. Demand is understandably strong for investments that generally increase in value with inflation and that are proven to be resilient because of the nature of the assets that they own and the essential services that they provide. So we think 3i Infrastructure is relatively better placed than other listed infrastructure investment companies, now that return requirements have started to increase along with the rise in interest rates. So we've always been investing at the higher end of the risk-return spectrum within the infrastructure market. Our weighted average discount rate used in valuing our assets is over 11%, which is still well above current bond yields or bank base rates. And that's also consistent with the upper end of our 8 to 10% target return to investors, which is after the cost of running the company. So our returns in the next few years will mostly be driven by the companies we currently own. And we're very pleased with the shape of the current portfolio. Our companies are performing really well, backed by those underlying megatrends I mentioned. Those megatrends will also drive a huge amount of new development for infrastructure assets. So think of the amount of new renewable energy required or the need to decarbonise difficult sectors. So we're confident in the outlook for 3i Infrastructure, as well as for the future new investment opportunities for the company.